Closing out the financial and the budget processes is critical final step in project management. This involves ensuring that all of the project expenses has been accounted for, budgets are reconciled, and the financial reports are accurate. The process also includes settling the remaining invoices and payments or dispute, ensuring the compliance with the financial regulations. And to start first with understanding, ensuring that all of the project costs are accounted for is closed. So ensuring that the all of the project costs are accounted for is requires a detailed review of each of the expenses on each of the categories that you have made spending project, from direct costs like maybe materials on construction projects, and sometimes labor, for indirect costs such as the overhead. And this step ensures that the project remains within the budget and that all of the expenses are probably allocated. For instance, let's take an example here when trying to understand the costs in IT or software projects. It's crucial to validate that the software licenses, also the development tools and training costs align with the project deliverables. Final budget reconciliation. So the final budget reconciliation involves comparing the actual project expenses with the approved budget to identify the variances. Understanding the root cause of these variances provides a valuable insights for improving the future budgetary accuracy. So ensures that you continuously compare the actual expenses with the budget as part also of the monitoring and controlling phase, where we have discussed the cost control, where we already have identified the cost variances, but now it's the time to have a full overview on all of the project, let's say, cost variances. By identifying these variances, you understand their let's say their causes and root causes. Now it's the time to learn from these, let's say, mistakes, if any, and to document these lessons as part of your lessons learned and continuous improvement for future budgeting. Financial reporting here consolidates all of the project financial data into a comprehensive summary. And this report should include the metrics such as the cost performance index, which I just mentioned, which is the CPI, and the variance analysis, which is the CV, to account the actual cost compared with the planned one, offering the stakeholders a clear understanding of the project financial health. Also, it's very important to share these reports with the stakeholders to ensure the transparency and obtain a timely approvals. Handling the remaining invoices and payments involves verifying that all of the vendors and supplier charges are accurate and aligns with the contractual agreements. Promptly processing these payments is essential to maintain a strong relationships with the vendors. So you as a project manager ensure that you verify and process all of the outstanding vendors invoices, close all of these disputes, and ensure all of the payments are made on time as per the contractual terms and conditions, and also always avoid these delays to maintain a good relationship and positive, let's say, vendor and suppliers relationships. To address these compliance with the financial regulations, compliance with the financial regulations is a crucial aspect of closing out the budget processes, and this involves reviewing the financial practices to ensure they align with the organizational policies, also with the external requirements, such as the tax regulations and audit standards. So ensure that all of you review all of these financial practices to align the organization with, or the project with, the organizational policies, and also ensures that you comply with all of these the tax audits reporting for as per the regulations, and prepare for potential audits to maintain these accurate records. Some of these challenges that you might face as a project manager when trying to close the project financially. So the financial closure can face some challenges such as discrepancies in record expenses, um, also delays in finalizing the vendor invoices, or overlooking the compliance requirements. These issues can lead to the extended project timelines or financial penalties. Addressing these challenges requires a proactive approach through documentation and clear communication with all of the stakeholders. Here are some of these best practices to have an efficient financial closure. So, best practices for financial closure includes initiating the reconciliation process early, using a robust financial management tools, also maintaining a clear communication with all of the parties involved. Tools like the QuickBook or Oracle can streamline the expenses tracking and reporting. Always maintain an open communication with the vendors, suppliers, and the stakeholders to avoid, let's say, last minute changes or to avoid last minute, say, dispute. And to summarize our, let's say, session here on the financial closure, closing out the financial and budget processes is essential for ensuring the accountability, the transparency, and the compliance. The proper documentation and reconciliation provides a clear records for stakeholders and future audits, while effective communication strengthens the trust between you and the stakeholders. And by implementing these practices, the organization can conclude and deliver projects efficiently and set the stage for long term success.